So you're the sole director of a limited company, and you're getting just a little bit tired of all the admin that comes with it. You've probably wondered, is there a simpler way to do this? Well, the short answer is yes. In this explainer, we're going to walk you through the exact steps for moving from a limited company to a sole trader, and crucially, how to get it right with HMRC. So why even think about making this change? Well, it usually just comes down to making your life simpler. Maybe you're fed up with the endless paperwork, the corporation tax returns, the director's payroll, all those administrative headaches that come with running a limited company. A sole tradership can definitely feel like the answer. And it can be. But as you can probably guess, it's not quite as simple as just flipping a switch. And this right here is the most important idea we're going to cover, so really let this one sink in. In the eyes of the law, and more importantly, in the eyes of HMRC, you are not switching your business type. What you're actually doing is closing one business, your limited company, and starting a brand new, legally separate one, your sole tradership. Once you get that concept, everything else just falls into place. This slide really gets to the heart of why it's a stop and a start. See, your limited company is its own legal person. It can own things, it has its own bank account, and it pays its own taxes. But as a sole trader, well, you are the business. There's no legal separation between you and it. And that fundamental difference is exactly why you have to formally end one relationship with HMRC and then begin a completely new one. Okay, so what does this all actually look like in practice? Let's start with the big one for most of us, the annual self-assessment tax return. As you can see, the way you report your income is going to change big time. Before, as a director, you'd be telling HMRC about your salary and any dividends you paid yourself from the company's profits. After the change, all that's gone. Instead, you'll be filling out the self-employment section. That's the SA 103, which details your business's total income and all your allowable expenses. It's a real shift from being an employee of your own company to just being the business itself. But hey, here's some reassuring news. Not everything is changing. You will keep your existing unique taxpayer reference, or your UTR. You'll still file a self-assessment return every single year. And those all-important deadlines, January 31st for filing, July 31st for payments on account, they all stay exactly the same. So you're really just building on a system you already know. Right, let's move on to the next key area, your legal obligations. And this isn't just a nice to do, this is about following the rules. So how do you actually tell HMRC you're making this change? And let's be absolutely crystal clear about this. Informing HMRC is not optional, it's compulsory. You have a legal duty to tell them that your limited company has stopped trading and that you have started up as a self-employed person. They are two separate notifications, and you have to do both of them. So what happens if you don't? Well, the risks are pretty significant. HMRC could end up applying the wrong tax rules, they could hit you with some painful late registration penalties, or even worse, they might just assume you have undeclared income. It can also cause major headaches with your national insurance records, which could affect your state pension down the line. Honestly, it's just not worth the risk. Okay, so let's break down the first part, telling HMRC you're now a sole trader. Now, even though you already have a UTR, you still have to explicitly register your new status. You'll just do this through your government gateway account. You navigate to self-assessment, select the option to register, and choose I'm self-employed. This is what officially tells HMRC you've started treating and are now on the hook for income tax and national insurance. Now for the other side of the coin, formally winding down the limited company with HMRC. This means you've got to file all the final paperwork. Your final accounts, the final CT 600 corporation tax return, closing your payroll scheme, and if you were registered, deregistering for VAT. Each one of these steps is a clear signal to HMRC that this legal entity is officially shutting up shop. This brings us to a really crucial point that trips a lot of people up. Dealing with HMRC for all the tax stuff is completely separate from dealing with Companies House, which handles the legal existence of your company. So, once you've settled up all your tax affairs, you still need to formally apply to have the company struck off the official register. You'll do that using Form DS-01. All right, this is a big one. Deadlines. I know they can be a huge source of stress, so let's get them marked on the calendar right now to make sure nothing gets missed. If you remember one date from this whole explainer, make it this one, October 5th. This is the absolute deadline to register yourself as self-employed. But here's the catch. It's not October 5th of the year you start trading. It's the year after. Let's see how that works. This timeline makes it really clear. So let's say you start your sole trader business in June of 2025. That tax year runs all the way until April 5th, 2026. Your deadline to register is October 5th following the end of that tax year. So, October 5th, 2026. Now, missing this can lead to penalties, so honestly, it's just best to register as soon as you start. And hey, don't forget, the limited company has its own set of closing deadlines, which are completely different. You've generally got 9 months after your company's year end to pay any corporation tax you owe, and a full 12 months to file that final CT 600 return. So you've got to keep these two separate timelines in your head. So we've covered the why, the what, and the when. Now, let's pull all of this together into a simple, actionable checklist you can use to guide you through the whole transition. Here it is, your 5-step plan. First, pick a clear date when the company stops trading and you start. Just decide it. Second, tell HMRC the company payroll is closing. Third, go online and register yourself as a sole trader. Fourth, file all the final tax returns and accounts for the old company. And finally, step 5, apply to Companies House to formally get rid of the company. If you follow this exact order, it'll keep the process smooth and logical. Okay, before we finish, let's go over the critical small print, the details that are so easy to miss but can cause huge problems. First up, assets. Anything the company owns, like a laptop, you technically need to buy from it at its fair market value. Second, bank accounts. You absolutely cannot continue using the company bank account. Close it down and use a personal or a new business account. Third, your business name. You must immediately remove limited or LTD from your name on everything. Invoices, websites, emails, the lot. And finally, and this is a big one, any financial losses the company had cannot be carried over to you personally. They just disappear forever when the company closes. And that brings us right back to where we started, doesn't it? If you take just one thing away from this whole guide, let it be this principle. Every decision you make, every form you fill out, and every deadline makes perfect sense when you remember that you are meticulously closing one legal entity and starting another one completely from scratch. For a lot of people, that long-term simplicity is absolutely worth the short-term process. So the only question left is it worth it for you?